I'm trying to find the best opportunities for the least headaches and continue to provide value every single day. What's happening, guys? I hope everybody had a fantastic weekend. We've got another Sunday video coming at you for August 7th and the week ahead. A lot of good stuff last week. Same old, same old. Everything that we've been discussing has been working. Each day in the room, I've tried to kind of pick apart one sort of sticking point or one thing that's been sort of happening and driving home that point. And so last week we talked about a particular failed follows through setup where I'm kind of looking for exhaustion, and you were able to apply it right away to a situation like Yell, TUP, and most importantly maybe something like TTOO. About knowing when to maybe be a little bit more hands off. No problem having a position, but if you're oversized and you're not letting yourself have room to a particular key level, which is acting as a ceiling, then you're just going to get chopped up. So we dived into a bunch of examples of that during the week. And then there was a couple concepts that I wanted to go over on video tonight, just to, drive home the point or the importance. The thing about trading is everybody is just so focused on profits. They're just focused on P&L, right? And sometimes they forget to think about the risk or whether or not there's even an edge on a particular name. And so one of the things that I wanted to talk about was MF. And MF was a fantastic opportunity on Friday, but not if you stepped in front of it and sort of forgot all of the things that we know just by, one, looking at the volume, two, looking at the float, and three, looking at the prior close. So one of the biggest, I would say, takeaways from that is knowing that circuit bands are going to be closed. What does that mean? If a stock closes under 75 cents, the amount that it's going to take to rip it into the next circuit halt is way smaller, than something that maybe is compared to a dollar or $2 stock, right? Where the percentage move relative to how it was moving prior needs to be significant the higher the price is. It's the same percentage, but when it's cheaper, it just is so much faster into circuit halts. And when things are maybe only 5, 6, 7 cents away or a dime away compared to, say, 30 cents or 40 cents, things can get real bad real fast. And yes, it could easily just peak out and then fade off. And, that's frustrating and that sucks. But if you guys watched the recent interview with David Hanlon, one of his is not necessarily strategy, but one of his risk management tools is, if he took on that front side of the move and he's already not necessarily sized in, but he's already in the name and it's not doing what he expected. He reacted to the trade. He thought he might have, not necessarily the top, but thought maybe that was the peak. It failed. He got in, and then it circuits back up. He has a rule, and his rule is he's getting out. He's going to be part of that auction. There's no questions asked. And the reason is because, like many, he's got PTSD from, ILAG and all these other trades that have gone circuit to circuit to circuit. We've all seen HKD and either ATXG or AXGG. I always screw that one up. But he's implemented that rule. There's no ifs, ands, or buts. And yeah, sometimes he's going to just shake his head and he's going to cover the top and it's just going to circuit down, right? But the times that it circuits, he's chilling and he's not, blowing up. And so the point is that pre-market, we knew on MF that it had a sub 75 close. We knew the day before. So we know the circuit bands are going to be closed. We know that the float was relatively thin. We know that it was tracking for an obscene amount of volume. So is there edge? Absolutely. for sure. But is there edge sizing on the front side of the move? What if you're wrong? And it goes into a circuit. So it's one of those where you have to go in knowing that this is the risk. And if you're okay with that, then fine. But for me, I'm not going to take on ridiculous size like years past, because sometimes you can't get away with it anymore. You can't. Everybody is doing the same thing. Everybody's shorting the same name. Everybody is crowding, thinking the same thing as you. And you're either going to be right or really, really, really wrong, right? So think about that before you even enter the trade. And one of the biggest things about being sort of a career trader is knowing what to avoid. That doesn't mean that you can't trade it at all. But what it means is just being aware. And, if you would normally trade, say, 30, 40, 50,000 shares, maybe it's a 5 or a 10 or 15,000 share type of trade, right? And that doesn't mean you can't size in later on if the whole thing explodes and squeezes everybody out, and now it becomes, relatively heavy because there was a short position came in, got squeezed out, blew out, and then, it's back to normal, right? And that's really what the small cap market is all about right now. You've got T+2, which is essentially you've got all the volume on a particular day. If the trend starts to hold, it's thin enough, and maybe there's failure to deliver on the short side, right? Maybe more people borrowed than there were actually shares. Maybe they weren't actual real shares. Then you run into an issue. And sometimes the clearing firms restrict it. And, there's particular clearing firms that over and over have shorts prohibited until they, clear it with the clearing firm. Because a lot of times they're loaning out shares that, are essentially synthetic. And a lot of times it's the same clearing firm. Fortunately, somebody like Clear Street, I don't remember the last time a stock has been prohibited. And what that means is they're actually borrowing the shares. They're actually getting those shares for, customers. And then other places where there's buy-ins and things like that, that's when there actually isn't a real borrow. Like you might have paid for it, but it wasn't actually, delivered. And that's when the buy-ins they come, and of course it's no fun. So just being aware of that and understanding what small caps are all about right now is truly the biggest I think edge that you can have as a trader, because it's not like it was in 2019 and 20 and 21 and all of those things. There's a lot of bigger players now that are trying to do the same thing that made them earlier on, but it's just a little bit of a different market. So you have to, it's not even about being greedy. I don't think that most people hold because they're greedy and they want more and more and more. I think they just haven't adapted to the fact that, yes, you nailed the trade, it faded. And guess what? It's not fading anymore. So it's going sideways, and it's either going to squeeze out at the close hard, or it's going to, kind of exchange and fade off a little bit. Then the next day it's going to do the move that you were expecting. And that happens a lot. And I had BFRG up here as an example. BFRG, you can see that I had 1 day of volume. And then, that was also probably the day that everybody's trying to figure it out. And it just kind of does nothing, right? And then the next day is stabilize, tank on much lower volume. So what that symbolizes to me is that everybody came in on the long side, came in on the short side, consolidated, shorts, covered into the longs. That was it, right? And then it's back to square one as if nothing happened. Came in, shorts come in, shorts come out, back to reality, starts to fade off. And that's been the trend. So failure to adapt has been the biggest thing, I think, for traders from 2009, the ones that performed in 2019, 2020, 2021. I think the biggest thing that has been different, that has been really hurting traders, is that failure to adapt. And again, I don't think it's a greed thing. It's just this worked for 3-4 years, and it's just slow to adapt that, hey, you know what, maybe I need to just take it and not look for, would typically happen over the last 2, 3, 4 years. So anyway, that's the thing about MF. As soon as you trade that, you're signing up. Just like we talk about on, like BAOS, BAOS, or any of these thin, small SPACs, or just low float stuff that's sub 1 million. If you're trading it, you're signing up for that risk. You're okay with that. Like, that risk on day one. So as long as you're good with that, fine. Don't complain about it. Most times you probably be right. But the time that you get stuck in a circuit to circuit, don't complain that you got stuck in it, because you knew when you went in. And that's the thought. That's the point with this MF, is you knew. And we talked about it. I went over it, and I warned against it, because one of the things about MF and what we saw was almost this gamified tape. And so when circuits go down or up, they basically have to hold in this like holding pattern for 15 seconds, right? So all the bids come in, and it's just a bid stack, 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 stack. And the reason is because people are trying to cover, but it's limit up, right? So some people might be buying to shove it into a circuit halt. Some people might be buying for the breakout. Some people might be buying to cover. And all of that just starts to stack, on the left side of the level 2, and you start to see those big bids. Same thing on when it goes down, and you see all these offers come down, and everybody's either trying to get out of their long or short because they want to get part of the gap down. However, what if it's not actually bearish? Everybody associates a circuit down with bearish, but when it's gamified tape, when they do a circuit down for 14 of the 15 seconds, meaning it's down, all right, circuit halt, almost swipe, right? On the 14th second, that's going to avoid it from a circuit down. And everyone that they just swiped was either selling in a panic, or more than likely they were short. And so now they know that they just cleaned out all those people in the low 120s in this case, and then swiped it up. So they know they either panic sold, or again, more than likely, it's all short. So now they know they've got lots of shorts in trouble. And now it's just about continuing to kind of gamify and trap, create that false ceiling. I think it was 205, if I remember correctly. Yeah, 205. So the channel that we're talking about in the room was 180s to 205s. And that's great. And they make people start to feel really comfy. Because every time it comes to 205, maybe it goes 208, 205, back down. 205, back down. 205, 208, back down. And so you start to get confident that, hey, 205 is the top. Meanwhile, 180 has been holding the entire time. Tiny float, heavy volume, closed circuit halts. A lot of FOMO fear built into it, and they can have fun with it. So I had a nice little rip, and flushed into the close. And like I said in the room, I wasn't making a call either way. It could have gone either way. There is no real edge. It's either going to do one of two things. It's going to be strong and rip into the close and have a huge exit and fade off after hours, or it's going to trade relatively flat and weak, trap, let shorts feel good because, yeah, we know 205's dead top. And then later on after hours, rip right through, and then they're screwed. So it's going to be an interesting 4 a.m. wake up. I held a few over, nothing of size at all. A couple thousand shares because it was a gamble. And anyway, I do think that'll probably be a 4 a.m. ripper, maybe $3-4 or something like that. I will not be up. So the first trade that I'll make on it is probably going to be at 7 a.m. if anything. But at any rate, that is sort of the recap of MF. I did put a tweet out there Friday about that. And you can see the kind of the walkthrough and the warnings in the room because the signs are there. And it doesn't necessarily mean you made a good call, doesn't mean that you traded it, doesn't mean anything. Sometimes just knowing what to avoid is an edge, right? And that is what I was getting at with the career trading. Like, if you want to be a career trader, you learn what to avoid. And yeah, you know what? Somebody's always going to make money and somebody's going to crush it on that trade. But is that repeatable? Or was it just kind of luck of which way it went? And that's kind of what I was getting at last week's video. sometimes people get so frustrated and they start pushing buttons just to kind of compete and catch up to, other people that are outperforming. I've said it probably 6 or 7 times already this year. I'm not performing to any capacity. I'm not doing as well as prior years this year. It's just not. Maybe it's just because I'm trying to take a little bit of a step back too, but I'm just not chasing the money. I'm not, super interested in that. I'm trying to relax a little bit, but also the A plus setups. We got MKLA, MULN, TTOO. There's probably one per week, I would say, compared to like one every single day. And prior years, you could size in and not really worry about liquidity. And now, like we went over with the top example, you can be right, stabilize, and wrong real fast. So that's the difference between this tape and prior years. So, MF was one. Catalyst run-ups, I just wanted to touch upon. Catalyst run-ups such as Open, OPEN, FUBO, FUBO. Those ones I traded, I traded FUBO and I traded NIO, NIO. So we had Open, FUBO, Uber, UBER, DraftKings, DKNG, and NIO. And so those are 5 names that just went straight up strong into earnings. And then after earnings, they actually gapped up, which is, I fumbled Uber and I fumbled DraftKings. And they both had big gap ups on earnings and then just straight unwind. I absolutely love those because people buy the headline. They're all excited for an hour. And then all of a sudden they're like, oh no, what do I do with this thing? Because I bought, it was up and now it's going red. And then we start to, have the unwind. So some of my favorite style setups, but I missed those two. I got FUBO and I got NIO. And then another one that I saw was Open. And again, I just try to put additional examples for you to see so that you can kind of, pick and choose what makes sense for your price range and see it. Open was a $5, $4, $3 type name, whereas Uber and DraftKings are 30, 40, 50 range, right? So then you can also see NIO in a $3 to $2 range. So that's all. Review those. Big gap ups on earnings report and then unwinds. Absolutely love that trade. I hope we have more of that. It's similar to Meta. We've seen a lot of that where huge gap ups and then just use that as liquidity all day. And then we also had NIO, where we had a big breakout day on Friday, a big gap up, and then, the unwind. So breakout to break down. And that was the game plan. The goal was ideally fade it Uber style and have that nice unwind back down. Slow grind versus speed up and gap up. The difference here, and this was a note that I had, but most people, you see like a UPST every day going up or whatever, but when I start to zone in and when the edge comes is when things start to either speed up or I'm joining the trend. You don't want to try to anticipate when it's grinding and when it's churning and when it's going sideways because that's consolidation and who knows which way it's going to break. So your edge becomes when things start to speed up out of its normal sort of behavior and otherwise just wait for it to crack and then look for that opportunity. Most people spend so much time, and I would challenge or ask yourself, how much time did you spend on TUP? And how much time did you spend on Yell on Friday or Thursday or Wednesday trying to figure out, which name was going to fade and when? And how many times did you get chopped up on those random swipes? Because everybody's doing the same thing. Everybody's trading the same names. So you want to stay away from what everybody else is doing. And then when everybody gives up, that's where your edge comes from. So Wednesday, Thursday this week, when everybody forgets about Yell and forgets about TUP, that's when the edge is going to really start to come. So think about that. And last but not least, Traders for Cause Vegas is sold out. Traders for Cause Boston, I think, has about 20 tickets left. And that is it, I think. Twitter winners, DOIGTT2, the Ravi Harani, You guys got the t-shirts for this week. Then on YouTube, Foronezlife, Foronezlife, and Abhim82, Abhim82. You guys have got the shirts. I did not verbally say them, the winners, last week on Scan, but they were on the blog post. So make sure you check out those if you did not claim it so far. Webmaster@investorsunderground.com is the email. All right, let's get into Scan. All right, so as always, I am not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. If you're not okay with that, shut the video off. If you're looking for somebody to tell you what to buy or sell, wrong spot. If you're looking to educate yourself on good risk reward and what, likely has good edge, good potential for the week ahead, you're in the right spot. NIO was a fantastic opportunity. This was probably one of my top 2 trades. I had 3 good trades, big trades on Friday. And the goal here, it was, a gap up, but I like to kind of think as a contrarian at times, and it's not always the case. It needs to prove itself. Like W, for example, interested me. This was W was Wayfair. It interested me on the gap up day, but dips absorbed, and it continued to head higher. There was no, parabolic move or exhaustion move that I could participate in. So that kind of voids that thesis. However, we had something like NIO where we had the same kind of gap up after a huge run, and then exhaustion move right off the open, able to start in, good volume exchange, and then scale accordingly. And then we're able to kind of look left and kind of determine that 15-20 levels is going to probably act as resistance. So I was able to make some more trades off of that. As you likely saw if you follow on Twitter, I had posted that trade that I had put in the room. So I'll be watching that one. I would like to use 15-20s as sort of a guide. And again, it's sort of that daily driver with XPEV and Rivian and all these other ones. I just want to fail to follow through and trade that trend. This MF, I think, is going to be a little wild. Trappy all day. I mean, it's clear as day. And, that's the thing is most of the time during the day, you kind of see what you want to see. And, if you take a step back or if you didn't have a position at all, you would probably see that every time it flushed under 180, they immediately absorbed it. Not once did it stuff and stay heavy at 180. So that's the first tell. And then the second part was what I was talking about. They're kind of creating this false ceiling, making you feel really good about it. And then, just kind of using that to their advantage later on once everybody feels comfortable and then making them pay. So who knows? It could gap down on Monday. It could gap up. It's really a coin toss. But ideally, we have some crazy sort of move and then a nice unwind later on. But just be cautious. You don't want to get in a fight with circuit halts. And as you saw on Friday when I warned about getting involved with this stuff, you don't want to try to figure it out in between circuit halts. If you trade it, make sure it's small. I'll trade it small here and there. But for the most part, I like to just be hands off just because it's not worth it, especially on a Friday after a good week. Fubo, same deal, and you can kind of see the topping formation. So what I did on the broadcast on Friday, I put these 2 lines, and it was 390 and 360. So the goal for me was to see either 390s continue to peak out or some sort of clear out, sit back, and then start into the trade. And as you saw, I pretty much participated in all the pops along the way. And fantastic unwind style name. These are trades that are available during earnings seasons. They're not always going to be the same kind of situation, but for me, I like them because that's where the volume's concentrated around those days. Failed follow through setup. Rad went a lot higher than I thought, and this is one of those where talking about adaptability. The earlier in this video, one of the issues that I had, I had great trades on it, But I didn't make, well, I made money the first day. This was fantastic. But the second day, I kind of got in there and I noticed that it was staying strong. And so I had started into the strength and it flushed. And I put 210 as the level in the room where I needed to see it kind of peak out at. And instead, it just kept on absorbing and absorbing. So I went to 210 for a little bit over half my position. And, I filled. And then it started to kind of grind up. So same thing happened with ADAI, where it was nothing that was bad, from a trading perspective. But it's the market where you need to cover the whole thing. If you're going to be trading on the front side of the move, there is really no, if you cover partial, I was talking to Josh Cherniak this week, and I told him like my weeks have been, I nail a great trade, I take 30% off, and then it just kind of grinds back to flat. So I've had such great trades, but I only capture 20-30% of it, then go back to flat, and then if I get a little bit stubborn, then I end up giving back the realized portion, if that makes sense. I capture 20-30% of it. The rest unrealized goes back to flat. So yeah, I still got this gain. So as long as I take it off for flat, I've got a small gain. If I don't, then I just go back to flat on the name. And so that's sort of the frustrations of this current market environment where, again, it's not about being greedy. It's you're trying to let this trade work. And it's like, yeah, no, we're going higher. So same deal, ADAI. I would relate these to something like BFRG. And if you look at BFRG, how many people were super excited this day? 55 million shares, right? And then it comes back up, way less volume. It doesn't have the momentum. So we know that this day was that transitional day. A lot of new buyers come in, a lot of exits come out, but there was also a lot of shorts. So the shorts came in, supported it through the day, and it held it up. But then nobody was home the rest of the days. When it came back up there, it didn't have any of the momentum, and it just faded right back off. So the point is I believe that's what we're going to have on ADAI and RAD. And, I want to be proven. I want to see, never force a trade. If I say that, for example, for me, and I think ADAI or RAD are going to pull in and it starts to kind of grind. If I'm forcing my bias, forcing me to be right that it's going to fade, that's wrong, right? So I want to be proven right with my thesis in order to take the trade. It's just like TTOO and, fantastic opportunities. But the more you keep missing the entry, for the short, if you're like, it didn't come up enough. I only got a partial. It faded. That means you're right. That means that it's going away from you. It's fading. You're missing it. And the point is that that's good information. If you keep on missing that ad, it's doing what you expected. So it's still okay to trade it. And that's something that I've worked on is just because I missed the optimal entry, there's still ways to get in. And obviously you can't maybe be as aggressive, but you can start in and then scale if you're right. Then the other two I have, Rivian has been a great trader as well. That was a good idea. That goes in the basket of, say, a NEO and an XPEV and all of those. And then AMSC, I've been watching, and I actually haven't really traded it too much except for the first day. I know Eric had a nice trade on it. I've seen some great trades in the room, both long and short. But to me, this just seems like a train wreck. It feels like they are, running it up. I had that article and like a lot of confusion with, I don't even know how to explain it, but they came out with some technology or whatever, and there's no real proof yet. He said, she said type stuff. And so anyway, it went to 22, came back down. And, I think this was all BS kind of move and somebody unloaded hard. But now there's a lot of folks probably stuck and trying to keep the volume up before the ultimate, rug is pulled and it heads back to, this level, which I mean, honestly, I could see it going easily into the 8 to the 7s short term, potentially even back down to, where it started. A lot of times we see this happen. So I would not be surprised. We'll see. But it's been fantastic opportunities each and every single day. And you can see kind of how they do just a little bit more and they clear out. We talk about this a lot, where peak, 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 peak. You've set yourself up to fail off that 1150s, right? You're like, all right, I'm going to stop out at 1155 because 1150 is the clear top. Well, they know that. Let's go to 1160. All the market covers come in, all the panic, all everything, and then boom, back down. So they're creating liquidity for themselves by kind of forcing it through there from people that are maybe too price sensitive and have, stops too close. Continuation side of things. TDS, nice mover. So I'd be watching sort of a dip and maybe 30, 40, 50 cents red, consolidate, and then rally back. AAOI, same deal. Nice breakout there. I think it caught shorts by surprise. Somebody's been loading. They let it kind of fade off, and then we've got the real volume now. So this is like real interest, and that can actually reset the chart. So sometimes people think, oh, it's just pump and dump, it's just squeezing and, yada, yada, yada. But now we have real volume, somebody positioned that day. And so now we need to see it continue to stay firm. If not, then yeah, looking left, might have some trouble versus that 1150s. So there's no problem with a gap up and it gets heavy at 1150 for a fade. But if it starts to consolidate at this higher level, I'd be cautious getting too aggressive on the short side. And then Freak should be familiar with everybody. That was sort of a big picture idea. I'm not there anymore. I had positioned in and then it started to fade. So I was like, you know what, it's dead money for now. And I never got back in there, but that was the idea was into the merger, and I forget the ticker that started with an A that did similar, but kind of had the huge volume day, let everybody out, and then it just marched up for quite some time. So anyway, that's it. Same old, same old. I'm just trying to find the best potentials for any given day, and move in, move out, move on, and that's it. I'm not trying to build a huge portfolio right now. I'm not trying to force trades that are high risk but high reward. So that's it. I hope you guys have a good rest of the weekend. One of the things I was thinking about, maybe if you guys this week, key takeaways, always awesome. So I appreciate you guys when you leave a key takeaway in the comments section or Twitter, or the guys that quote the tweet and put their key takeaways. Absolutely love that. If you guys have things that you've been having difficulty with, if you've been hitting a wall somewhere, if you keep on doing the same thing, if there's certain questions that you have getting past barriers, and if you continually find yourself comparing or there's the double-edged sword of social media, right? You get videos like this and you meet great people, and then there's other people that bring you down or make you feel insignificant. So if you have trouble with that and identifying which way to kind of go and how to really get the most out of this career, post those questions. Post what you got. And I'll pick a few of them for next week. And that's it. Enjoy the rest of your day.